Okay, so let's make a full breakdown of the situation that we currently have for BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the on-chain data, and by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong level of previous monthly resistance, which is now turned support. Now, as the market is testing previous resistance turned support, we could expect this rejection to the upside, which in fact the market is currently already providing. Now, if we zoom out and look at the macro, what we can see is that the level that the market is currently rejecting is exactly the previous cycle high. From here, all the previous bear market was developed. Here, we had the halving, the market entered into a new bull market, then we had the current bear market, which in my opinion ended with the creation of this low. I do not expect the market to create a low which is lower than this one. Now, at the same time, I do not expect the market to create new all-time highs before 2024, only after the 2024 halving. Only at that point I expect the market to print new all-time highs. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, I did speak about BTC USD a few days ago. I spoke about it during this correction. I explained why there was a very good probability that the market would have created a move to the downside, hunted all the stop losses of people that had entered leveraged longs during this move to the upside, FOMOing into the market. I said that there was a very good probability that the market might want to go and liquidate all those positions by hitting their stop losses and only at that point create the move to the upside, which is in fact exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. Now, as the market is continuing to the upside, we could expect more bullish price action to be developed away from this area. Now, going down on the daily time frame, what do we have here in the daily? We can see how the market just created a massive impulse to the upside. Now, in general, after an impulse, what you could expect is a correction before then getting more bullish continuation. Specifically, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment has a 0.32 retracement currently exactly at this previous daily resistance turn support, which we could expect the market to potentially go and test before then getting rejected to the upside. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, and we look here specifically at the exchange reserves, so the amount of Bitcoins on exchanges, what we can see is that as the price was dropping, the amount of Bitcoins on exchanges was dropping even harder. And now during the move to the upside, we are not seeing any increase of the amount of Bitcoins on exchanges. Now, this creates massive illiquidity, because there are no Bitcoins ready to be dumped on exchanges, or better said, the amount of Bitcoins ready to be dumped that are already on exchanges is continuing to drop. And this means that if demand will increase, or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving, price should increase to accommodate for that new demand. So if we will see a correction to this level, how we could be approaching a potential reversal to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.